Not too long ago, there was a young man named Jack who had always been fascinated by the stock market. He dreamed of making big profits by investing in the right stocks. One day, he decided to take the plunge and start investing his hard-earned money in the stock market. However, Jack soon realized that he had no idea how to choose the right stocks to invest in. He knew that he needed to do his research, but he wasn't sure where to start. So, Jack decided to do some reading and watch some videos to learn more about investing. He discovered that one of the first things he needed to do was look at a company's financials. This included their revenue, earnings, and debt levels. He also learned that he needed to research the company's management team to make sure they were experienced leaders with a track record of success in the industry. Jack found this part particularly interesting, as he had always been fascinated by the stories of successful CEOs and their leadership styles. Next, Jack delved into the competitive landscape. He looked at who the company's main competitors were and how the company stacked up against them. He found this part of the research process to be challenging, as there were so many variables to consider. Jack also made sure to stay up to date on the latest news and trends in the industry. He read news articles and followed the social media accounts of industry experts to gain insight into the market. Finally, Jack considered the company's growth potential. He looked for companies that were in growing industries with a solid business model and a strong competitive advantage. He found that this was one of the most important factors to consider when investing in stocks. After doing his research, Jack felt confident that he was making informed investment decisions. He carefully chose a handful of stocks to invest in and watched them closely. Over time, his investments began to pay off, and he was able to achieve his financial goals. In the end, Jack learned that researching before investing in any stock is crucial. By taking the time to do his research, he was able to make sound investment decisions that paid off in the long run. As Jack continued to invest and build his portfolio, he also learned the importance of diversification. He realized that putting all his money into just a few stocks was risky, as a downturn in one industry or company could have a significant impact on his investments. So he spread his investments across